Good morning, everybody. Yes. Oh, wrong. Sorry, the wrong channel. There we go. Here we are. We are here. It's a little bit of a chaotic morning. All my fault. Apologies. We're here with Mando. He is back, and he's a new permanent addition to this little trio. We're going to talk about some chaos trilemmas. CTO, Mando, how are you guys this morning? It's Monday.
Yeah, doing great.
So I should ask one at a time. Mando is here because our previous star, Ivan, we had scheduling issues due to time zone changes and all that type of stuff. But Ivan will be back when Bitcoin hits $100,000. So that's a guarantee. So it'll be the four of us when that does happen. That's a promise from him. So we have a big agenda today. We're going to talk about a whole bunch of stuff. But before I jump into that, the links will be below for... wrong chart. For Mando's Twitter account. Mando is the guy in the know in crypto and macro. That almost sounds like a little poem. So make sure you follow him below. And of course, CTO Larson, you all know. So let's jump in. We have a lot to get through. We're going to do the hot takes as well from Mando a little later in the session. All the top things that you're looking at today. We're going to look at some TA as well. If we have clear skies ahead for Bitcoin and other names out there, we'll talk about what's going on in the whole world, things we should be aware of. And like Bitcoin had struggled at 65.6 all weekend, and I was just watching it tap that glass and it was ready to break out, and it did break out last night. So let's talk about one thing first. This is a super chart from HODL 15, and it talks about how much is technically available to buy. And when we look at the actual supply crunch that's out there, it is pretty insane. Let me see if I can get this big. Yeah, this chart here. Basically, what it says is the amount available is 2.6 million, but at 450 a day, there's not much to go around, and that is a big, big problem. And we'll talk more about scarcity later, but what do you guys think about the ETF so far? It's been a while since we've spoke, Mando. ETFs, success, failure, what do you think? And do you believe a supply crunch is potentially coming down the line?
Yeah, I think it's been an absolutely massive success. I can't really think you can argue otherwise. I think last week was one of the weakest weeks that we've had since the inception of the ETFs. That being said, I think BlackRock is on 69 days of straight inflows into their ETF. Interestingly, over the weekend, you saw Grayscale move to try and stem the outflows. They're launching a mini ETF with smaller fees. In fact, industry lowest fees. So that could potentially help, which has basically been GBTC outflows versus BlackRock inflows. That should start to maybe make things a little bit safer. Last week was a tough week for macro, so it's a tough week to judge the ETFs on. But for me, I actually think, and maybe this is contrarian, that we're going to see those inflow numbers actually just go up. I think you saw the Bitwise CEO on the weekend saying that wealth management firms are now going through clearance to buy Bitcoin. The wealth management arms of some of these major banks, Morgan Stanley, Goldman Sachs, UBS now, they are absolutely vast. If they're now going to be turning on the taps to buy Bitcoin, that's a huge buyer. And then you also have, obviously, the Hong Kong ETFs, which should be launching this week. There is some light expectation that could be in the tens of billions. You know, like mainland China has been largely cut off from crypto, except for like mining activities, and a lot of the funds could be directed towards some of these Hong Kong ETFs. So there are some figures banded around of like 20 to 30 billion. That would be a massive win, I think, as well for crypto. So I'm super bullish on ETFs. I'm super bullish on institutional flows actually increasing rather than diminishing. Last week was just a tough week to judge things on.
Yeah, there was a lot in there actually to unpack. We, of course, have the geopolitical risk and the Fed jawboning and all that stuff. But you hit on a couple of things, and that's kind of what this chart trying to show is that mini ETF could stem the bleed from GBTC. The RIAs, it takes them 90 days to get comfortable. They're beyond that threshold. You mentioned the vast banks are incoming. And there's also Hong Kong, and a lot of people say, oh, well, it's just Hong Kong. the mainland China doesn't have access, but they do. I spoke to people on the ground. If you have money, you have access. It's kind of like I call Hong Kong now the financial district of mainland China. It's where you want something done, you go there. Now, you did say something very interesting in your tweet this morning, that what's going on with Fink and increasing his security after going anti-woke. Is that anything to do with Bitcoin and getting away from ESG and really changing his whole tune?
That is exactly it. I mean, these people are political animals, right? Like, they understand that maybe 4 years ago, the ESG woke political view was far more accepted and actually pushed, let's say, by liberal elites. It's now kind of turned against it. And Fink's a money man. Like, he knows where the money's going. He knows where the politics is going. He's now, a lot of their ESG trends have been stopped. They've actually shut down a few of their ESG funds this year. BlackRock have increased his security ever since he's done that. This is an incredibly powerful man. So if he's directing the policy of trillions of dollars, they did increase his security. I saw that in the Financial Times this week.
Awesome. CTO, we have another little chart here, and it's one we've all seen before, and I'm interested in your take. And you said clear skies ahead on the Bitcoin chart, but, first epoch 54x, second one 13x, third one 7x. Everybody's asking what's next. Will it be 2 or 3x, or could it be a lot more? And I wouldn't be surprised if we saw more than the 3x, and the reason is the asset is harder, there's less liquid supply, there's more demand. It's an official asset class. We've got these ETFs. We've got these big banks coming in. Could this match last cycle or even half of it? And a 3.5x from the halving price is still substantial. It's 180K plus 200K. Where do you see us going? What do your charts tell you in your little crystal ball over there?
Yeah, absolutely. So I think there's two perspectives on this. One is if we kind of look back at the whole history of Bitcoin and see how the parabolas have behaved, how it has behaved before and after the halving, and try to apply that to predict what will happen the next time. And that gives us basically two outlier scenarios, which I think are interesting to kind of box in what could happen. And that's really, if we go back to this chart, is really useful because it has historical prices all the way to the beginning of Bitcoin. So if we only look at the parabolas, we're in the fifth parabola now. And exactly as showed on your chart that you showed there, James, they have kind of been smaller and smaller. They've had the same shape exactly and behaved in the same way, but the total magnitude has been diminishing. So if using that model and applying it to the fifth one, the parabola would already be exhausted. This would be it. Go to like 75, 80,000. So that's like the absolute low case. I don't think we will see that. The other thing that is standing out when looking at the previous... Excuse me? The other thing that is looking at the previous parabolas and the previous halving is that to like I'm getting like some echo. I'm not sure if you both can mute, perhaps. Then is that the pump before the halving and the pump after the halving have been the same length, the same duration. You see it very clearly here. Like, this length in days is the same as this length. This length is the same as this length, and this length here is the same as this duration. So if that pattern repeats now in the current parabola, we have pump going on all the way until September 2025. So that would take price up to somewhere around 300,000. So I think that is definitely a possible scenario, and which of those two will happen, we will have to find out. But I think that really boxes in the two outlier scenarios. If we look at shorter term, if we just look at the price action right now, it looks fantastic. The TA looks fantastic. If there would have been a breakdown after the halving or before the halving, like a sell the news event, That should have happened here at 61,800. So support here was very clear at 61,800. Each time price dropped below that, boom, came a buy order, sending it back up. The same way as we had resistance at 70,800. So that's what we saw. We got a dip of about 20% from the top to the support of this diagonal trend line that we've had for a long time. It goes back a year. We almost touched that line, a little bit front run, and price shot back up into the range. Trend remains up. It never changed. And the support is holding. The 1 year supporting trend line is holding. And everything looks fantastic. So I think that out of those two scenarios, I think we're going higher. I don't think this is the top at all. I don't see any signs of that. And then we have all the fundamental aspects like the ETFs are coming, the grayscale outflows are slowing down. We're getting ETFs in Hong Kong and all the positive signs that we're having. And I think also now a lot of speculative assets took a big hit with yields pumping, but at one point those are going to come back down again, and that will also fuel the market. So I think it looks fantastic.
Mando, how do you interpret this right now? And with the perpetual bid coming in from the ETFs, even though last week was a weak, that sounded funny, but you can see the impact of these bids coming in. And as I calculated, the average buy for the ETFs, literally, if you exclude GBTC, the average buy per day is north of 5,000 Bitcoin. Now we have 450 a day. And in my little brain, I can't reckon with that. What do you think about this chart? And what do you think about that perpetual bid coming in from these ETFs and how the weekends always pump like clockwork?
Yeah, look, the Bitcoin chart looks really good. It was a nice little retest there. I think it went down to its realized price, which is around 58K. It kind of pumped just before it got there. I think even on the horrific on some of the geopolitical headlines over the last week, we kind of got to high 50s and then bounced pretty aggressively. So from a technical standpoint, it looks good. I think a lot of Twitter and a lot of people who are involved in crypto aren't just involved in Bitcoin, they're involved in altcoins. And altcoin charts have had a much tougher last couple of weeks. This is a healthy looking Bitcoin chart. Bitcoin looks like it could easily go to 100K. A lot of altcoins are down about 50% in the last month. And most of that actually happened in the last 2 weeks. So it's been a little bit more scary, I think, if you're involved in broader crypto markets. For me, Bitcoin is just straight line up to me. It looks, this chart to me looks kind of perfect. A nice little retest. And now we can go higher. Funding, it's gone much lower in the market. I think open interest is down to kind of where we were when Bitcoin was around 40K. And funding actually went negative at one stage. And the last time it went negative was when it was at 26K, and it pumped all the way to 40K after that. So really nice setup for Bitcoin for me. I think it probably breaks through the all-time high, I think, over the next few weeks, maybe even shorter than that. And that was just like a perfect dip to buy, in my opinion. It's altcoins where things are looking a little bit more spicy, and I think you've got to take a few more risks. But yeah, I'm very, very supportive of Bitcoin. And from a flows perspective, like I said, last week was a tough week. In fact, you have several of the ETFs having zero inflows, like days where nothing was really going on. And that tells you there's been a lot of macro stress, which there has been. I think last week, tech stocks, a large number of tech stocks basically erased their whole yearly gain in a week. So the fact that we even held up so well during that shows you the strength, I think, of Bitcoin here.
Exactly. I just think about, all the talk now is there'll be no rate cuts this year. So risk assets go in the toilet, and that's a big impact on top of the geopolitical events and all the other crazy stuff going on. The fake economic numbers are really rattling in the markets. Definitely. Let's get this last Bitcoin story out of the way before we move on to altcoins and macro and all the hot things that are going on right now. Looking at the liquidations chart about an hour ago, there's going to be massive liquidations if Bitcoin gets close to 67K. A lot of 100Xers that are short are going to get wrecked. This could provide a bit of a short squeeze. Is this something that either of you look at as well?
Yeah.
Yeah.
This is something that I look at a lot. These liquidation charts is something that, this actually, it was a very similar looking chart when Bitcoin was about 72K before it got smashed lower on, what was it, a week and a half ago. Quite tight around that level, and if it starts going, it will really gather momentum because liquidations will just push it higher. So for me, that's looking like a perfect short squeeze, provided we don't get some horrific geopolitical headline again. I think Bitcoin's just looking very healthy this week.
Yeah, good. And we'll get to altcoins in a minute, everybody. Don't worry. There's one other piece of news that came in over the weekend from a newspaper I used to subscribe to when I lived in Zurich, was NZZ. And I know, Mando, this piqued your interest. And you saw this, I think, Saturday morning, if I'm not mistaken, where the Swiss National Bank is trying to petition, or somebody in the government is trying to petition the Swiss National Bank to add Bitcoin to their balance sheet. And the Swiss have a lot of gold already. So, CTO Mando, were you tracking this? Did this take you by surprise? Because this would really, like, literally, I've been waiting 7 years for this game theory to be ignited. We know there's a sovereign somewhere buying, probably, most probably. And if a Western nation like Switzerland, which used to be the banking capital of the world for a long time, does this, that will raise eyebrows like crazy. I'd love your thoughts.
I mean,
I think
it's
this is
always
just a matter.
yeah, please
You
go
go.
ahead. You can go ahead, Mando, please.
Oh, I was just going to say it's a matter of when, not if. Like, this is going to happen. 100%. One of the major central banks of the world is going to come in and do this. Switzerland regularly ranks amongst the top 2 or 3 countries for crypto friendliness. Like, it's a little bit of a sleeper. A lot of people look at like Singapore or even Dubai recently, but Switzerland, a lot of the major foundations are based there. It's always been very crypto friendly. I would be very, very unsurprised if they were to move to do this. I don't think they'll probably wait for some of the other major or maybe second tier central banks to start doing it first. But yeah, this is going to happen at some stage.
You know that the trend is kind of set by the first follower. First comes some crazy person, and everyone thinking, oh, but that person is crazy anyway. It was like when Elon Musk started adding Bitcoin to the balance sheet of the company, and everyone thinking, oh, but that's ludicrous. And then even he maybe hesitated a little bit. But now we're seeing like, okay, so El Salvador is doing something, okay, but everyone thinking, oh, but that guy is like, out a little bit anyway. But then when the first follower comes, so the second one, when that happens, I can assure you, then number 3, 4, 5 is going to come, and then comes 10, 20, 50, 100. And then towards the end, they start panicking, because they don't want to be, no one wants to be first or second, but then they don't want to be in the second half either. And then they start panicking. So I think this can absolutely happen. And there's a lot of countries, right? There's a lot of countries. It just takes a couple of people who are willing to risk a little bit more, and then it might actually happen. It seems impossible now. This seems impossible to most countries. Like, nah, that's never going to happen. Crypto and Bitcoin is some scam, and it's environmentally friendly, and it's mostly criminals who use it. That's the view, I think, of most central banks at this point. And so now it feels like that's never going to happen. But I think it will. I agree with you both. I think it will happen. First it's El Salvador, then it's some other country, and then suddenly comes like country like Switzerland. And even if they just buy, 0.5% of their gold reserves or something like that, something just to take a part in this kind of digital era instead, and it will have a huge impact. And I think the same with companies. I think that what Elon Musk, he was maybe too early at that point, but I think it's going to come. I think it will be the same with company balance sheets and a lot of other.
And the Swiss have the independence to make the move, and they've done that before in different ways. So I think that is an interesting one to look at. Now, we had a weekend where
it will be sovereign wealth funds first, though. That's what I would say. Like, you'll see the sovereign wealth funds move before the central banks. But yeah, I think all of this has happened.
What's your take on Mr. 100, Mando, actually, now that we're here? Because a lot of people say, oh, it's an upbit wallet. We know it's a cold wallet, but it's not cold wallet behavior. That's the thing. What do you think?
I mean, I don't know. He's now like a mythical figure in crypto. It could easily be one of these sovereign wealth funds. It could very, very easily be. I mean, a lot of people are attributing it to Gulf states right at the moment. A lot of talk about Qatar as well as many of the others in that region. I mean, that would be very, very unsurprising. I think if a central bank was to do it, it's kind of like when Luna bought Bitcoin. There's like this indication if a central bank's doing it that your actual fiat currency is not doing that great. But if a sovereign wealth fund was to do it, I think they have a bit more independence. So yeah, I'd be very unsurprised if you start to see more and more of these big sovereign wealth funds. I'd like to see some of the biggest ones, like the Nordic ones, move into this. That would be huge.
Yeah, that's interesting because I was watching Norway, and Norway are very pro-electric and they got abundant resources, but they're now all of a sudden anti-Bitcoin mining. They're trying to ban it, and it doesn't reckon with me. But sometimes governments make decisions that are not logical. Anyway, let's not focus on that. Bitcoin fees freaked people out. They spiked to the moon. They were 3x. Then they hit the highest level ever in 15 years. And then they mean reverted fast. A nothing burger or just the indigestion from the halving and runes?
Well, this was very specific, I think. It's very specific to runes, which is the new liquid token protocol being built upon Bitcoin. And many of the different major runes projects were essentially raising funds to try and be one of the first runes inscriptions. So Casey Rodemir, I think, got the first one, but then a number of the other projects were trying to be in the top 5 to 10. And I think you saw one of the blocks having the second highest fee ever on Bitcoin. And I think the day of the day after was the highest ever fees ever on Bitcoin in a single day. I think fees are now 7x ETH over the last week. So huge day for fees, but it's really just a meme coin play. You know, if you're the first, if you're not first, you're last. So a lot of these runes wanted to be in the first 10, 20. And I think I saw a bunch of them, like inscriptions 20 to 100 were like all just different breeds of dogs. There was just like different breeds of dogs that they put on the blockchain inscribed. I don't know where that goes, but yeah, people were very, very keen to do this because that's also been one of the main ways that people have made money on ordinals, which is kind of the non-fungible token standard, which is being built on Bitcoin as well. The early ones were the ones that were worth the most, and that's how they're going to do it with runes, I think.
Yeah, CTO, have you been tracking the rune stuff? Do you play with that at all?
I'm just really happy that the money is coming to the Bitcoin miners in this way. And I mean, this is like first some steps, and yeah, some memes, dogs here and there, and so on. But I think it's a really great development, actually, that the mining ecosystem are getting a bigger share of the pie, and I hope that this turns into a success for the miners, and that they get more appetite to extend the protocol a little bit. I mean, there's been this everlasting debate, right? Should Bitcoin never be changed? It's like an atom. It's like the gold atoms. You cannot change them. They exist where they are, and it's like trying to tinker with it is like doing alchemy. That will never happen. The protocol is fixed. That's been one ideology. And then there's been another ideology that, no, it should be extended and try to reduce fees and bring more stuff into the Bitcoin ecosystem. And for many years, this has been a very infected debate. And I'm happy to see that there is something happening. I mean, I don't think that this protocol is the end game. It's, many of these protocols paid very large sums to inscribe something. In one of these blocks, was it like 700,000 to inscribe one, right after the halving and so on. But I think the trend is really great. I'm happy to see this, and I don't think we need to worry about the survivability of the miners when we see things like this.
Yeah,
so I think it's great.
It's funny, CTU, you mentioned kind of speed and block size and the block wars. I think I made a video on Friday or Saturday. Oh, the block wars are back again. Oh no, why didn't they move ordinals and stuff to Bitcoin Cash? It was kind of the question kicking around. But this came out from Fred Krueger, friend of the channel. In the future, banks like JP Morgan will issue wrapped Bitcoins. And this is how we solve the scaling problem on Bitcoin, not with larger blocks, and then move these wrapped Bitcoins to faster chains like Solana, but they're redeemable for Bitcoin. What have either of you looked into this? It is a new story. It might be a tinfoil hat theory, but there's been a lot of talk of moving some of the transaction layer stuff to faster chains in a different version. I thought this was kind of like he said, traveler's checks. You guys are probably both too young to remember what those things are back in the day.
I remember the traveler's checks, and I mean we've had the wrapped bitcoins as a big part of the ecosystems for many years. The problem, if we should bring a problem, is that you introduce one more thing that can go wrong, and I'm not sure what would happen if there is some malfunction of some kind. Will the wrapping chain roll back their chain to kind of rescue those Bitcoin or not? Like if there is, I mean, if it's in Ethereum and the main wrapped Bitcoin contract malfunctions or there's a hack of some kind, yeah, maybe they will roll back. Don't know. But what if there is another layer of construction? JP Morgan they don't want to use the regular wrapped Bitcoin. They want to add some more functionality. So they have another contract. And then there's only, in quotation mark, say 50,000 Bitcoin there. And that malfunctions. Is Vitalik going to roll back the whole Ethereum to fix it? Perhaps not. And I think that's a risk. That's why I'm not so sure. I don't think if you see Bitcoin as this digital gold that can't fail and can't be manipulated, I don't think that large players will want to hold the wrapped Bitcoin. But maybe for DeFi trading some meme coins or something, of course you can use that as one asset already today.
Yeah, it's Mando. It's clear that 7 transactions per second isn't going to cut it for the future world. Where do you see the solution coming from for Bitcoin?
It's a really interesting point, and CTO, you made a good point there as well. Like, I think there's like a bury your head in the sand sometimes about Bitcoin maxis around this problem, that it will just solve itself, but it does require some thought around the security budget. Bitcoin will run out, which means that the security of the network has to be questioned when that happens. And a lot of the ETH maxis say, Bitcoin eventually move to being an EVM chain or proof of stake or BNL2 in some sort. The idea that a large amount of supply could move onto a like ETH, that's an interesting way of putting it. It definitely solves some of the security budget issues and solves the idea of like a tail emission. I can actually see that being kind of an acceptable solution to a lot of people. But I agree, there's obviously risk. There's risk to all this sort of stuff. It does hurt the purity of it all. But I mean, like, logic is logic. You will run out of Bitcoin. People are going to have to be satiated in some way for the security of that network. So these sort of innovative solutions may be the way.
Speaking of a faster chain, Solana congestion fixed. We're not sure, but 90% of the validators upgraded. CTO, I'll give this one to you first, and I know, Mando, you're tracking it, but where are we with the upgrade and the congestion fix? And this is something that runs at 2000 TPS and still gets congested. Can you imagine 7 TPS, just for perspective?
Yeah, so I think the Solana price definitely got hurt by the congestion issues. I felt that was very clear in the price charts. And that means that I think it can get unhurt also when this is like conclusively solved. And I'm really interested in both your inputs here, because now the 1.17 patch is rolled out. And I've tried to read when the 1.18 will actually be fully rolled out, and I read it as it's end of May, but I'm not entirely sure I'm reading it right. So I feel that this can be a quite big opportunity that when this whole kind of technical issue is in the rear view mirror, I think there's good potential in the Solana price action actually. But I'm not sure it is completely fixed, and I'm not sure this schedule is relevant. This is for one of the um, validators, so this is for Agave, but I mean there's other clients as well. So yeah, I'm curious about your take on this, and if we look back at the price action for Solana, I think it's looking actually really good, because this really got hurt here somewhere in early April. It held well until that, but then it kind of took a big hit. But then price support really held up at 0.002. That's this level that has been important going back already to early 2022. And that level held. So price held here, but I think that when the market feels that, okay, the technical issues are finally solved once and for all, and it's working well, I think there could be more upside in this chart. So I'm very interested in this question.
And then fired answer towards the end of the year too, potentially.
Yeah.
Which would be a big game changer too, both in terms of decentralization and, of course, adding capacity and speed. Mando, any thoughts on this one?
Yeah, look, I think you need periods of FUD in a bull market. Like, people have been, if you've missed the run up in a lot of these and you felt underinvested along the way, like, you needed periods like this to get an entry. I think Solana was a perfect example, and for a range of other coins. If you haven't really performed so well this year, most coins over the last couple of weeks, months are down 30-40%, sometimes 50%. Good coins, even with good narratives, this cycle. So I think this was a perfect example to maybe rotate into a better story. Solana to me still feels like an unfinished story this cycle. I think the tech issues are still going to be there, at least until Firedancer rolls out, and that's still kind of maybe in the summer that people are saying that's going to be, or at least maybe even around breakpoint, which is kind of early autumn. So I think that's the main time where, like, the single point of failure is removed from Solana. I think the story is still very, very strong. I think you can't be blind, even as a Solana holder, to understanding that a lot of the cycle has been driven by meme coins and people on board by that, and a lot of that sector got very badly hurt over the last month too. So, like, big coins like WIF are down like 50%, and all the smaller coins are down. They're never going to come back. So I think you have to appreciate that it's probably going to be a bit of a slower build back up to that local high. But I really like that story, and I think it's still going to be a very, very big story for the rest of this cycle.
Do you see usage moving over to base or Mando, or how do you see that?
I tend to find that can be quite transitory. Like, these base season lasted for a couple of weeks, and then it kind of drifted away. At least for the meme coin season that I think people were calling for. I think base has got some interesting innovative apps on it. Friend Tag has kind of gone through the ringer a bit, but it's starting to come back. They have Friend Pet. But they just never really last that long. That's what I tend to find. Like, whenever I go away from Solana this cycle, and like, it is going to be a new hot narrative, people just always come back, because base always has had issues as well. Like, it went down. It also had high fees for a while. Like, you kind of just always drift back, because it's so advanced in so many different bits of the value creation in Solana. Like, it's got a flourishing NFT ecosystem. It's got a flourishing app ecosystem, DeFi, memes, just like everything about it is already at that adoption point of the chain, whereas a lot of others are not quite there yet, or it's being built out and the UI UX isn't as good. So I think it's still very, very hard to move away from Solana this cycle. It still feels like the ETH of this cycle to me.
Interesting take. We have one final section, which is going to be called Mando's Hot Takes. He kicked this to me right before we started. And this is kind of like a grab bag of topics that are hot on your mind, CTO, and Mando on yours too. We kind of covered some of them too, but let's start with the Z Casino rug. lots of VCs invested. I am not up on that story, but I do believe Web3 gambling, gaming, whatever you call it, what do they call it, GameFi, is going to be big, because I always look at the traditional world and look at what's happening in the US, where they legalize sports betting and you got your DraftKings and all these other players coming in. It's only a matter of time before all that moves to blockchain. Update us on Z Casino and what happened there, and explain to us why crypto is the Wild West.
Yeah, it's a very interesting story, actually. It's a casino chain that was being built by a team that were actually kind of involved in two soft rugs before, notably already Syncus, which is down about 95% and was called Ohm 2.0 on Solana. I mean, that says a lot for people who are aware of Ohm 1.0. But they basically raised about 30 million odd for a casino chain, which they said they were building. They said that it was going to be like a ZK roll-up. In the end, they released the chain. It was like an Arbitrum Orbit chain, which took them 5 minutes to build, apparently. They got a security audit from ChatGPT, and they have taken the 30 million, and instead of giving it back to users on the native chain, they've just deposited it in Lido, and it looks like they're going to be walking away with the cash. And a lot of VCs invested in this. So they raised 30 million, something like a 10x valuation. And a lot of people are now pointing fingers about the lack of due diligence in the space. You'd be shocked at the lack of due diligence from a lot of VCs over the last few months. Like, it's literally just been throw money at whatever sounds like it could make me money. And I think a lot of VCs are licking their wounds and acting like they never really invested that much. The ones that didn't invest are being as loud as possible. And it's all pretty funny if it wasn't for the idea that, a lot of users that could have lost $30 million here. So one of the worst rugs that I've seen in crypto so far this cycle. It's not yet fully a rug because the funds are still locked in Lido. And in fact, the founder is just like tweeting as if nothing has happened on Twitter at the moment, just not answering any questions about it. But he has been involved in essentially two soft rugs before, and the famous, CoffeeZilla of crypto Twitter, ZachXBT, was exposing them well before this happened. And it just looks like this is just another crypto rug, which people dived into because they thought they were going to get free money.
Super interesting. CTO, were you aware of this one at all?
I saw it on Twitter. I didn't follow it. But I mean, it's interesting that these supposedly professional VCs and so on, I mean, we saw it, what was it, a month ago? Suddenly, some of these VCs were setting up like meme coin research funds. They were researching which meme coins to make investments in. I mean, it's not investment, it's like gambling. And I don't know. I don't think you need I don't think it's a research topic. I don't know. And that was basically the local top. So, I mean, these VCs, they're degenerate gamblers like everyone else, clearly. And,
I'm seeing a lot of earmarks from 2021 already happening in 2024. And I thought a lot of that was going to end. And I'm seeing a lot of desperation from players, talking about these special unlimited yield opportunities. And remember, everybody, if it sounds too good to be true, it is too good to be true. We had the Eigenlayer thing blow up this morning as well. I didn't have time to read too much into it, but of course it's a yield crisis. You don't get 20-30% forever. It just doesn't work. It's a modern day crypto Ponzi. Any thoughts on that? I see you nodding, Mando. Are you up on the Eigen story too?
Yeah, I mean, a lot of this is linked to funding in the market now. Like a lot of this, what actually drives it is the funding on futures products. That's what has been driving much of DeFi with like some of the new plays as well. And that's where people have been depositing their ETH or their stable coins. And now the funding has gone lower. A lot of these things suddenly look like they're going to have a difficulty. There's also there's a lot more competition, I would say, in that space as well, which is driving down yields, both on the staking and the restaking level. So Lido's been losing market share, and Eigenlayer similarly. So yeah, I think DeFi, to a large extent, this whole restaking upon restaking, I think this could be one of the like canary in the coal mines, I think, of this cycle. Like I do think it's all a little bit pyramid-esque.
And so somebody came to me regarding the Athena thing. Not only is the tokenomics absolutely horrific, but it's the same thing. It's like, oh, look at us. We can manage futures. We can generate infinite yield. It's like, have we heard that before? I mean,
Well,
it's like people don't remember what happened 3 or 4 years ago.
Athena is the prime example, right? I do think Athena is doing a trade which a lot of hedge funds have done for a long time in the space, which is just you own spot, you short futures, you take the yield. If you're doing it at such massive scale and you're taking in a ton of retail funding as well, and then you have a period like you had last week where funding suddenly goes negative, I don't know how exactly that breaks, but I can imagine the stress of massive withdrawals of an extended period of reduced funding. It could be a complete disaster for the market. And these are protocols now with billions of dollars in, and Make is putting its money into that protocol as well, into Athena, which tells you that you're not only that, you're getting contagion risk in the space, because a lot of products are co-investing in essentially each other's yield pools. That's all the hallmarks of a contagion-led like disaster.
That's exactly it. I call it a house of cards. Yeah.
I mean, taking a step back, it's the easiest thing in the world to design a protocol that pays out money as long as other people are still depositing into the protocol. Then there's like 1001 ways you can do that. But will it work when there's mass withdrawals from that protocol? That's the risk. So it risks being this like 1001 days in the lives of a Thanksgiving turkey. Like everything is perfect until the day suddenly the money is gone. And we saw it in both decentralized protocols and centralized companies during 2022. It was like right and left. Now this kind of risk appetite is going back, and there's 101 great ideas for these different protocols, staking upon staking and guaranteed yield and whatnot. And there is a risk in that. So I think that if anyone is looking at that, kind of think like this, that nothing is secure, right? And if you're getting 5% yield or 10% yield, that means that there better not be a 1 in 10 chance that this thing blows up and all the money disappears. Because if you're getting 10% on the upside, but you have like more than 1 in 10 chance that the money disappears for whatever reason, it's not a good risk reward. So you have to kind of look at both sides of those coins. And of course, that's not always easy, but at least we need to try. And I think a lot of these things look really risky, honestly.
Okay, let's talk about the Rune coin, leading Rune and Satoshi Nakamoto. This is your hot list, Mando. I'm going to kick it to you. Tell us why you're so fascinated with this.
Yeah, so this is a slightly esoteric bit of crypto right now, and a number of different people have been calling this like the next 100x sector to be looking at. Bitcoin has never really had a successful ecosystem of coins. BRC20 has attempted over the last year, and Runecoin was created by the same creator as Ordinals, which has been relatively successful already this cycle as the like the non-fungible token standard on Bitcoin. Runes is his liquid token standard. It's very janky to trade. In fact, horrific to trade because it's Bitcoin, and block times take a long time, and a lot of the UI UX isn't built in the right programming language, so it's always had some difficulty. That being said, people are looking at this as like the next cycle of meme coins. The one that really kicked off over the weekend. This started on 2 days ago, so this is very, very early to be looking at, but probably quite late because people have been talking about it for a few weeks. So depending on your perspective, but the meme coin that's become big is a coin called Satoshi Nakamoto, and people, I think it ran to a few hundred million already, and then I think Gate listed it, and now a bunch of different people looking to list it. I think this is one of those, it could be 100x, it could be zero. There have been other attempts at meme coins on Bitcoin before, either via some of the L2s, via stacks, or this BRC20. They had Audi, which is like the first coin there. And a few of the coins here, including Rune Coin, Satoshi Nakamoto, Pups is another one. But you will see a lot of people saying that this is the next sector that could potentially do big multiples. There is massive risk involved. Very, very difficult to even buy one of these. You have to go through various different, like you buy them on Unisats, or have to have a special wallet to be able to buy them. But a lot of the major NFT marketplaces, a lot of the major exchanges are going to be looking at this as like an onboarding mechanism for new people as well.
Awesome. You had another piece there, Sol FTX auction details. I thought that was all sold. People like Pantera, Galaxy grabbed a bunch. They're locked in for 4 years. Was there another auction? And how much was it? Because we saw huge staking happening over the weekend. 2 massive tranches of tens of millions, if I'm not mistaken.
Yeah, so they actually sold 2/3 of their FTX in that SPV to those two. Yeah, Pantera led the round alongside Brevin Howard, but they still have about a third left. They were going to release details today about how much they were going to sell, but it's going to be an auction. So it's different this time. It's not going to be an SPV. They're going to auction it. So people are expecting the price impact to be much reduced. It's still going to be locked. So it doesn't change. It's not like Solana's not just going to be dumped onto the market. It still is locked in the same multi-year vesting schedule. But they are going to, and it's a much smaller amount. At the maximum, it will be the remaining third, but I think it will be even smaller than that. And they're going to be doing an auction to try and sell it. So people have been saying that this is part of the reason also why Solana underperformed, because this supply was going to be coming to the market. So it will be in the hundreds of millions, I would expect.
Good. And the final thing on your list, actually, L1s and memes bouncing. It looks like the alts have bottomed, but one of the questions I've always had for both of you, I think CTO asked you this last week, with all these meme coins, there are literally, I don't know, thousands, hundreds of thousands, tens of thousands, I don't even know. They've got to be sucking liquidity from the other major assets, whether it be Ethereum or Solana or Avalanche or whatever else, Bitcoin even, because a lot of people are like, okay, I can make life-changing money playing with this meme, or I can try rustle together 65,000 for a Bitcoin. What am I going to do? CTO, what's your take on these memes before we go back to Mando? Then these memes sucking liquidity from the system. Do you think it's a huge impact? It's got to be, because they are the top performing sector, but also high risk.
I mean, the good thing with the meme coins is that I think it perks a lot of people's interest for the sector as a whole. I've seen like real people that I know that kind of, they were interested in crypto, but then they kind of lost interest, and then they didn't come back until it's too late and so on. And they felt, now I missed the run on Bitcoin and everything. But they are interested in the meme coin. So I think that it does kind of bring people in, because it's like that dream of 10,000x whatever next Pepper coin will be. And yeah, I don't know. So it kind of brings people in. Then most people, I think, end up not being so successful in the meme coin market. It's like this truth that making money is easy, keeping it is hard. So they do succeed, they do make some money, but then the same tactic that they have to make the money is the same tactic that will lose the money, because they will kind of fall in love with this coin, and they will hold it all the way down.
Easy go.
Exactly. So they will kind of hold it all the way down, while actually the market is transitioning into some other meme coin and so on. So as usual, what will happen is that more professional, more experienced players will kind of harvest money from the less professional, probably. But I do think it brings people in. I think that this is mostly money circulating within the crypto ecosystem. I don't think so much money is coming in or going out. And I think
a lot of airdrop money too, isn't it? A lot of airdrop money that people got for free, and they're taking their wormhole, selling it, or their win, and they're depositing it somewhere else.
Yeah,
a
exactly.
zero
It's
sum
kind of
game.
hard to track the flows because, of course, market cap doesn't really reflect this. Market cap might go up a lot, but there has been very little money floating into the system. It's just that, the price goes up, but there hasn't been much inflow. And then that market cap can drop back again without there being much outflow either. So I think that's what we're seeing. I think it's a fun element of the current market. It's pretty difficult. And I think a lot of people listening should be aware that you kind of see a survival bias on Twitter. You read about, this coin, this guy, look how successful he was. He traded this one from one banana up to $10 million. Okay, yeah, but maybe there were 999 that also went in the other direction. So it's not as easy as it looks. And I would caution anyone from taking all their money and putting it in 10 meme coins because they can all go down,
Yeah, and
to
in
zero.
fact, Mando, you're a resident meme expert here, as well as an expert in many other areas. But tell us, one of the things I did read over the weekend, and that was 12 meme coins were abandoned on the Solana chain literally overnight, which is interesting. What's your take on this whole space? It does battle hard in the chains, and as CTO correctly said, it is driving interest and adoption in blockchain, and it's fun for people to play with, but it can also be ruthless and dangerous too. Your take?
Yeah, I mean, there's a lot to unpack there. I think you would still find it it is big for onboarding. I think even the Jesse Polak, who's one of the main execs at Base, he said over the weekend that it's like a Cambrian explosion from onboarding this meme coin season. You're getting tons of new people, and I think you'd actually find that if you ask a lot of people in crypto, one of their first buys was often a meme coin. You can't deny that it's actually is quite a big onboarding thing. The risk return profile is obviously a lot like gambling. A lot of this stuff goes to zero. A lot of them even have a life cycle. They'll go up to a certain level and then kind of never come back. And you have to appreciate that gambling as a whole is going up in society. It's also going up in crypto. Like people reach for these sort of outsized returns because like you said, Bitcoin's at 69K. Like, how am I going to get that sort of return? It's very, very similar. In terms of why I mentioned it was just because it's been the best performing sector so far this year. Memes dominated in terms of sectors. I think AI was maybe behind that, but in terms of like the subsectors in crypto, it done well, but had a very, very tough last month, and now it's seems to be rebounding alongside L1s. I think the next few months are going to be a bit more difficult for memes, just because there's probably a lot more people now licking their wounds after some pretty heavy losses, and it'll be interesting to see if it sustains the same level of interest, or it just becomes a gateway drug for these people who have kind of come into crypto via memes and now look at other stuff. It's undeniable that it has hurt the rest of the altcoin market. It has really been really taken from a number of different other altcoins, utility style coins. Like a lot more people are have been looking at meme coins. The cleanest way to play it, even just meme coins being a thing, is probably just being involved in some of the L1s. Like Solana has been one of the best ways to play the fact that memes are going to be a thing for a long time. Like getting involved in the chains which are fast and cheap and able to sustain that sort of speculative asset class is a clear way to maybe understand that memes are going to be around and not even have to invest in them. I think it's like they'll always do well if memes stick around. So I think that's probably the best way to play it if you're looking for a play without actually getting involved in the sector itself.
Brilliant insight there. Thank you so much for that, both of you. We'll touch very quickly on tech earnings, and then we'll go to about 5 or 6 questions from the audience that we have in the pipe. But quick breaking news. I'm actually looking at the spot ETF volumes right now. For the first time that I ever remember seeing, BlackRock is doing 6x the Grayscale volume today. And Fidelity is doing more volume than Grayscale. So that is looking good for flows today from BlackRock. Again, is that 90-day for the RIAs to get comfortable? They could be deploying right now, especially considering that Bitcoin is under an all-time high. So it's a bit of a no-brainer for some of the trad people to come into the space. All right. let's tech earnings. Any quick thoughts on that? We know all eyes will be on Tesla. That's going to be very, very scary. But again, the whole company is changing. The way I see it is real simple. The pace of AI evolution is so rapid, so fast. Some people say 1,600%. Sometimes people say 1,600 times more evolution is going to happen in the next 2 to 3 years. That if you don't bite the bullet and embrace it now and go whole hog, or as Elon says, balls to the wall, which is a diesel engine terminology or something like that from 100 and something years ago, you're going to be left behind. What's your take? I know digital era is your big thing, CTO. It's mine too. AI is transforming everything. Mando, what do you think of this AI revolution and tech earnings? And what would you do if you were running a company like Tesla and you wanted to maintain your position as being the biggest AGI company on the planet?
Yeah, I think AI is going to be absolutely massive, like absolutely massive. One of these sort of moments in technology where we look back in 20 years and be like, well, that was when the internet was created. That was when, is there going to be a real technical shift, I think, for everyone? Tesla has been in a difficult scenario because, yes, it's an AI company, but it's also an EV company. And EVs just haven't really sustained the same level of demand, at least in Western markets, as they was hoped. And the Chinese EV makers have really come through and are starting to challenge them in a lot of the Eastern markets. So it's just been a more difficult period for Tesla. That being said, they are going to be world class in a lot of the technology that you wouldn't even associate with an EV. I think he came out over the weekend with robo taxis, with the strength of their AI, and also some of the other companies under his remit. XAI, with the amount of data they have. There's lots of different ways, lots of different resources for him to build incredible AI models here. So I think Tesla's going to be still a best-in-class company. The reason why I just put it on here is just because crypto, to a large extent, had kind of ignored a lot of this for a while. Like, we hadn't really had a macro sell-off in crypto for a while, and then suddenly, with all the geopolitical headlines, and then the tech sell-off, it really became to the forefront. And I think you have Microsoft, Alphabet, Tesla, and maybe one other. I think Meta as well is reporting this week. So 4 very big tech earnings. I think a lot of people will be looking at how they all go. I'm a buyer of Tesla stock here. Like, it's down a lot this year. Like, you gotta believe in Elon. I think he knows how to unlock value in various different ways. I think he'll do very, very well.
Don't fade Elon. I think CTO as well. You've been nibbling on Tesla, if I'm not mistaken.
Oh yeah, I'm very interested in this, and I agree with everything Mando said, and because I feel like the business model of building physical products in competition with Chinese companies that try to copy everything, that is a fairly difficult business model. It's harder than you would imagine. I've suffered that myself. So that part of the business, I think, just like Mando said, I think it's going to get tougher and tougher, despite the manufacturing advantages that Tesla has. But then it is the AI part where I feel that they have an enormous advantage, and perhaps it can build synergy also with the information from X and all the data they have from the self-driving legacy data that's kind of built and, I guess, stored and handled in some way. My only question, and this is, I'm not sure, I've asked it before, but I'm so interested in both your takes. Do you think that AI, like Elon Musk's AI ambitions, will it be in Tesla, or could it be in another company? I have no doubt that he will succeed with it. I'm just want to make sure that I have the right stocks in the right company. So it's not that all that ends up in another company and Tesla kind of becomes like car maker.
Tesla's at maximum FUD level right now because nobody understands it. And then you have that whole overhang of the compensation plan that a judge in Delaware revoked, which is like, hey, we're going to give you something and 7 years later we're going to take it away, which is completely against the ethos of US capital markets. The reason US capital markets are good is because they are fair. That threw a spanner in the works. So we'll find out if that gets ratified and back on the table. If not, they'll give him another comp plan and make him whole. I'm not concerned. Elon has a vision that is beyond money. If you've seen how he lives, he doesn't care about being the richest man in the world. He cares about mankind being interplanetary. That's his big game. Whatever it takes to get there, that's his focus. And we'll see. He's also in war mode now, which is exciting. So all good. It's just one of these things, as you mentioned earlier, Amanda, this is a buying opportunity like kind of Solana down to 129 I bought the other day. These are times that you grab with both hands. You didn't think you were going to see that opportunity again when it goes to 220 and then all the way back. It's like, these are the opportunities. And that leads us to our first question, which is super interesting, from Michael Kennedy. You guys are floating this narrative on how great Bitcoin is doing, yet it's trading no higher than 3 years ago. So a lot of people are so frustrated. It's like, where's my 100,000? Where's my 200,000? Where's my $250,000 Bitcoin? But the key to investing, again, this is something that people miss. It's not a buy and hold game, but it's about timing markets and accumulating at low prices and then selling at high prices. Buy low, sell high. And the crypto markets are very predictable. We've had the most incredible buying opportunities like $15,500, $16,000 Bitcoin, $8 Solana, Bitcoin miners, MicroStrategy, all this type of stuff. That's where the real money is made. Sitting in your hands and just watching the markets for 3 years and not doing anything is not the way to play. I'd like your thoughts on that from Michael. And sorry if I'm being a bit blunt.
Yeah, look, I think it's a little bit tough because you can always pick a point in time. And Bitcoin obviously was at its highest 3 years ago. Part of that was like a levered run up from FTX, which then collapsed and took us all the way down to, whatever it was, 16K. So I think it's a little bit tough. Like, you could also look at it 10 years ago and be like, we're up many, many multiples. So I think it's you have to be aware that like you can't have time bias for a certain point in time versus now. And the reason behind that last drive was really kind of FTX driving it up higher. That being said, like, I think tech is also, like I just said, like, you're going through a revolutionary period of tech here with AI. A lot of what has been driven in the NASDAQ has been just from 7 stocks, right? The Magnificent Seven, all with capabilities in AI. And to say that like crypto is bad because AI is good, I think is missing the point. Like, they can both be very, very good. And in fact, they can both go very, very well together. So I think just lever yourself to both. That's what I would say. Like, it's not that crypto is a bad investment. It will do incredibly well. A decentralized ledger is a revolutionary technology, and decentralized stores of value, ability to transact across borders in the way that crypto allows that to happen, as well as the various different utilities provided by a lot of the different coins. That's revolutionary technology. You've got to buy into those sort of stories, but that also means you can buy into a lot of the AI stories too.
And you said something very important then. And since 2022, I was all in on crypto and AI. That was it. Nothing else, because that's where the money is going to be. And you got to be like surfing. You got to be on the wave when it's a little baby and then ride it as it gets bigger and bigger as it approaches the shore, and then jump off before you break your ankle on the sand. So it sounds very crude, but that's investing in a simple way. Next question, CTO, for you from Glass777. Hong Kong ETFs and UK ETNs. There's some type of regulatory restriction around retail investors buying them. There is in the UK. It's really for their version of, don't know what the term is in the UK for accredited investor, but you got to be big money to play. Why these restrictions?
I don't know why there are those restrictions. I think that the whole idea with that the US has, I think you've changed it a little bit, right? But you still have the accredited investor concept based on money. Like, you have to be rich to get to invest in the best investments. If you're poor, you're not permitted. And it doesn't, and I think that that's a ridiculous idea. It's a garbage system why should you be treated differently depending on who your dad is? If your dad is rich or if your dad was poor, you should have access to different investments. I think that's a nonsense idea, and we don't have it in many European countries. Instead, there is a competence-based qualification. You have to show that you understand what it is you're buying, which I think is a good thing. Otherwise, people will go and buy a lot of things they don't understand, and then they get surprised when they lose all the money. So I think a competence-based model is good. I don't know the situation in the UK there, and I actually didn't know that if there is a accreditation based, and I don't know what it's based on. I don't know if it's capital based or if it's competence based. Do you know, Mando?
I mean, generally ETFs are available for most retail investors. I think just for this particular time, they made it for professional investors. It's not regular, the ETF. I mean, ETF as a product is very similar to a mutual fund. Like they've built them for retail to get lowest fees in class for various different, like your own portfolios. I think they just did it for this time, and I think it's mainly because a lot of like the SEC, the FCA. Their mandate is really just to protect retail, like that they have that in their like remits, like their actual official remits. That's what the SEC thinks they're doing when they're coming after crypto, and it just creates a sort of like misguided regulatory capture over certain things. And I just think it's bad policy to think that you're protecting retail by reducing the number of investments that they can make. I think it's the sort of thing that will probably change, though. Like I think they're probably doing this because it's one of the first products to come out, and then with time they'll probably allow more retail investors to be able to use it.
I can add maybe that there's many European ETPs. They're not exactly ETFs, so there is a difference. It's too much to go into now, but they're exchange-traded products of different kinds, though they are not exchange-traded funds. But in practice, it works very similar. And that has been existed in Europe since 2015. So we're talking 9 years ago. So, and that's available on a lot of different European markets, I think almost all the markets. And those are definitely not restricted for retail investors. Though the ETF concept is a little bit better. It has a little bit more transparency and security, which makes it even more bizarre if they lock retail out from that while the other ETPs are permitted. That would be very strange. But there definitely exists European ETP products that are available and tradable on the major exchanges.
3 more quick questions and I'll let you guys go. And I'm very grateful, so don't forget to subscribe to these 2 great individuals down below, links down below. Next question is from Mike Grell. I'm confused how the current cycle looks to be repeating the past 4 cycles when we have the ETFs involved. Does that mean the ETFs would make no difference if it happened 4 times without them? I'll take this real quick. The ETFs have pulled in $36 billion in 69 trading days. That is a staggering amount of money. Also, the asset class is a lot larger. Bitcoin went from 10 million to 100 million to $1 trillion, and now it's more than $1 trillion asset class. So it takes a lot of money to move it. And the other interesting thing about what happened this cycle so far, retail didn't come in till 30 days before the halving. It was all ETF buyers, net new, and of course, Grayscale dumping, which were the speculators in the space beforehand. So this time is very different, and we're a lot higher, a lot earlier than previous cycles. So I expect this to be a very different cycle. And it's going to be exciting to watch if the laws of supply and demand work, because we are, there's no doubt in my mind, we're going to hit a supply crunch. I don't know if it's going to be in the next 3 months or in the next year or 18 months, but there is not enough Bitcoin to go around. Unless, of course, the price goes really high and everybody starts selling them for lifestyle chips. Next question from Jimmy Dean, unless you guys disagree with what I just said. Jimmy Dean says...
I think it's exactly right. And I think it was a really great question. I saw it in the chat also. It's a great question. And it's because the ETFs and the institutions that the patterns might repeat on a much higher price level. Like if you think about the first parabola, all it took was a bunch of computer nerds putting in little money to send the price up. Okay, that was parabola number 1. Then parabola number 2, it took a little bit more. It took at least a couple of real investors to send the price up. Then parabola number 3, it took a little bit more. Then parabola number 4, it took Elon Musk being on Twitter and buying Bitcoin in Tesla and stuff like that to send the price in that parabola. Now parabola number 5, we're on higher price levels. It takes more. It takes like ETFs. It takes institutions. It takes El Salvador. But we're having all those things. So that's why the patterns might repeat for a 5th time. And that's what makes it so exciting. We're having all these things that enable a 5th parabola on higher price levels, which takes more money. So very interesting. Great question.
The next question is regarding from Jimmy Dean. What do you think of Coval Circuits of Value given runes? Do you think this can see $1? I had a quick look at it. It's an ETH-based chain. I don't know if ETH-based chains will do well this because there's just simply too many of them. There's thousands of them. I never heard of Coval, and I don't know the relationship with Rune. And you guys ever hear of that? It's number 650.
I actually hadn't. No, I wasn't aware of that.
Yeah. So we'll have a look. I will check it on the compendium later. It's actually not in the top 500, so it doesn't have a score, but we'll see. But it looks like, again, there's thousands of ETH chains. If you think you're going to go after CoinMarketCap rank number 800 ETH chain because it has some tangential relationship with something on runes, you're risking your money. That's just my simple take. BTC Monster 101. Coinbase seems to be getting too big, like Apple and Facebook, swallowing any tech market share. But in crypto, we don't like this centralized power. Is Coinbase going to centralize crypto? Mando, what's your take on Coinbase? Too big?
I wouldn't say Coinbase is too big. It's not even close to being the biggest crypto exchange. Binance's spot volumes are far, far higher. It does have a lot of power in the US, and it remains to be seen if it's kind of a strange scenario in the US because you would assume that they'd be championing it, but the authorities, particularly the SEC, is going after it. So, there's been a lot of talk about it now getting a license in Canada and, flirting with the UK and France and all these other places about like opening up regional offices. I would say Coinbase's best move this cycle was Base, and it's now earning incredible fees from Base. Very similar to like Binance, obviously has BNB, the BNB chain. I think the chain narrative is now a very, very supportive one for Coinbase. I don't know. I don't think it's too centralized. I think we're probably going to go the way that only a few exchanges are able to pass the regulatory scrutiny of various different places. You will get, again, regulatory capture in all these different places because only certain exchanges are going to be able to pay to pass all the different regulations and all the different jurisdictions that they go into. But for now, I think Coinbase is okay. I don't like centralization in crypto. Like the fact that Binance had such big questions around it last year was definitely not good for the market. But I think the Coinbase to me has been a relatively good actor so far, and I'm less worried about more power to Coinbase.
Yeah, one of the things I am concerned about regarding Coinbase, and this is a second last question, is not only are they acting like an OTC desk for the ETFs, but they're also custodying 8 of the 10 ETFs for Bitcoin. And that gives me concern. What happens if something happened to their custody? That would really put a spanner in the works. In addition, the way things work in markets, I always say this, winner takes most. So you don't get 10 players that win. So it's inevitable a Coinbase type company would dominate the US and the Binance would dominate Asia, etc. It's just how it works. So not too concerned right now. I would be concerned if there was an ETH ETF and they were also custodying all the ETH. That would be very terrifying. But anyway, we'll see if that happens. And it could happen too. And finally, final question, I'll let everybody go. Brad Kingsley, love these DCAs. Mando is a great addition. Mando, we appreciate you for being here. And CTO, we appreciate you too. Any final thoughts before we wrap? We've gone over an hour.
Yeah, this is my second one. It's been great. I like speaking to you guys, and it's very refreshing. Very high level, a lot of the conversations.
Well, I hope you're a permanent fixture from now on, and we'll do a lot more of these as well. Thank you both. We'll be around next week as usual again. Thank you to everybody in the chat. Thank you to moderators too. And we have somebody in Liverpool liking Mando as well, Sean Donnelly. So.
Oh, really? My family's from Liverpool, so
There you go.
maybe relative.
Maybe you saw the accent. CTO, any final thoughts?
Just really excited. Happy that, the halving worked. Everyone took it for granted, but whenever, there's a major event, there's always like a 0.1 chance that something went wrong. Someone changed something which shouldn't matter in the code, and then, oops, that would have been a disaster. So I'm really happy that it worked well, and chart looks great. Trend is up. I'm excited for the future. Now, let's see if we get the scenario with same duration after the halving as before the halving. That would really be amazing. In that case, we have over a year of amazing times in the market. So I'm really excited, and forward to the continuation.
And CTO, that point is so important, because pre-halving, there's always a lot of hesitancy. Is it going to work? Is it going to crash? Is it going to die? Is that it? Is that the end of the bull market? And all of those questions have been answered because the Bitcoin price has gone up, and the money is going to start really coming in now as well. The next month, I think, will be super interesting. We're going to see how much the ETFs in the US buy, and in a week to 10 days, Hong Kong is going to come in. And remember, even if they're only coming in with $1 billion a month, which is very easy for that type of culture with the amount of money that they have and how they're looking for real estate hedges, and they're paying 30% premium to buy gold ETFs right now in Hong Kong. It's going to be good. Thank you both. Thank you, everybody in the audience. We'll see you all soon again. Have a great week, you guys. Cheers.
Thank you. Cheers. Bye.
Thanks.